Well, howdy to all of you payment-conscious property owners out there. Right now is one of the least affordable housing periods that we've ever seen in history. And home prices are up, rates are high, but coming down and maybe pretty fast. So look out below. Things are starting to change as we speak. But also insurance is skyrocketing right now. Insurance in Texas is up 60% over the last 5 years. And, the good news, I guess, is that your house is worth a lot more if you bought it within, at least prior to the last 2 or 3 years. But if that is the case, then that just means that you owe the tax man quite a bit more money. And so whether you own one house or multiple houses, the rising costs are going to be eating you up and having you eating ramen and choosing to watch commercials on Netflix for a cheaper subscription package very, very quickly. But have no fear. You have stumbled upon the Texas Real Estate and Finance Podcast, where I, your host, Mike Mills, a North Texas mortgage banker with Geneva Financial, come to you each week with new ways to navigate this ever-changing real estate adventure. And this week, I hope to enlighten you. Well, actually, this week, I hope to lighten the load on your bank account a little as we discuss a new company leveraging technology to help you save money on property taxes, home utilities, and much, much more. But before we get started, putting a little money back in your wallet to fund your next trip to Starbucks, I'm here to ask you for a favor. If you find today's episode helpful in any way, please tell a friend. This month, our little podcast that could reach over 1,000 listeners, and every month it just keeps growing. And you guys are the reason why. So thank you very much for pushing us to higher and higher levels each month. Please keep up the great work. Like, comment, subscribe, share. It all helps us help more folks just like you. Oh, and if you have anybody looking to buy or refinance their home anytime soon, send them our way as well. We do that part even better. Okay, so my commercial's over. Now, let's get on with finding some ways to find some money hiding in your couch cushions out there. So today's guest is an innovator at the intersection of real estate and technology. As the co-founder and CTO of Ownwell, an Austin-based company revolutionizing the way property owners manage their assets, he's leading the way in developing cutting-edge technologies solutions to reduce the cost and complexities of owning real estate. And today, he's going to share all of his recipes with us. So without further ado, please welcome Joseph Noor to the podcast. Hey, Joseph.
Hey, Mike.
How we doing, sir?
We're glad to be here.
How are you treating life these days?
Oh, it's been great. I got an 8-month-old daughter, and every day is a gift.
Congratulations. Yes, every day's a gift except when you don't get any sleep, right?
That was this morning.
Yes, having infants is awesome, and they don't do much. They just kind of sit in a spot, so you get to stare at them for a long time and just hope that you can catch a nap in between. But I guess as dads, though, we kind of get sometimes get the longer end of the stick, as they would say, because mom tends to be the one that's dealing with that more often than not, and you get the stink eye because you're over there sleeping while she's up feeding the baby every once in a while.
Totally, yeah. Mom is everything, right? She's comfort, she's nourishment, she's everything, and I'm the fun guy.
Yes, you get to be the fun guy, and it gets even better. Moms control that stuff and manage how those kids grow, and we're just there to make sure they have a good time. And I'll say it so you can talk. I tell my kids my job as their parent is to make sure they don't grow up to be assholes. So that's exactly what I'm trying to do every day.
There's a few things, but that's definitely one of them.
Yes, absolutely. So, all right. So before we kind of dive into all of your background and how you went from, selling golf balls to working in NVIDIA, which I'm very interested in hearing about, and then getting a PhD in computer science to starting a real estate company, which all of it is very, very fascinating to me. Let's start with Ownwell. So I want to know what you guys do and how you're doing it to help property owners save money. And, if it involves robots, I'd really love to hear about that because that would be really cool. But, either way, tell us a little bit about what you guys do.
Absolutely. Yeah. So Ownwell helps people save money on property taxes. Everybody in Texas, every homeowner in Texas knows that you should protest every single year. It's time consuming. It's burdensome. You have to prepare your evidence. You have to go present that evidence and argue on behalf of your home. And usually you're arguing with an assessor who has tons of experience and basically does this for a living. And so it's a really unfair battle. And so we wanted to make sure that we equipped homeowners with everything they needed to get the best possible reduction and make sure that they're paying no more than their fair share in property taxes. So we started the company 4.5 years ago, been growing ever since. We are definitely focused and primarily operating in the Texas market. We are based in Austin after all. And that's the way it works. Basically, the way we think about it is you sign up, you put it on autopilot, and we take care of everything. So every single year, we're protesting your entire portfolio, whether you own one home, whether you own 1,000 homes, and we make sure that we get the best possible reduction for you.
So, okay. So this isn't a new thing, right? Especially Texas is, we were talking before you came on, you're originally from California, got to Texas as soon as you could, like everybody else. But, you're not arguing a bunch of property taxes in California because they have state income tax. Property taxes aren't quite as high as they are here in Texas, but that is one of our main sources of revenue as a state, where you're taxing property owners, which, you can argue the good or bad of that, but it is the reality. So, arguing and protesting property taxes, I would say, is nothing that is brand new, right? Totally. So it's something that's been around for a long time. So what is it that separates you guys from, I've been personally myself, I have a guy here locally that I've paid, like $300 or $400 a year, sometimes a percentage of it. They go argue taxes on our behalf, keep our value low, et cetera. So what sets you apart, from those guys? What makes you guys different?
Yeah, absolutely. If you look at some of the more like traditional providers, they tend to focus on the higher value property, right? Like they go after the commercial market, they go after like the $1 million homes, things like that, because that's where they can stand to make the most and they can charge the most for those homeowners. We took a totally different approach. So my co-founder, he comes from as an asset manager at a family office where there was a billionaire's real estate portfolio and they were appealing that portfolio every year. And he thought it was really unfair that a billionaire is taking advantage of the system that most people either don't, or if they want to do it themselves, they have to learn all this real estate knowledge and become a real estate expert just so that way they can argue on behalf in front of an assessor. And so we wanted to make sure that we built something that was accessible to everybody, whether you own a $50,000 mobile home, whether you own a single family home, or whether you own a portfolio of homes, that we were here for you. And the way that I think about it myself is I want to build technology that supercharges our people. So we hire the local experts in every single market that we operate in, and they're boots on the ground. They know exactly they have the relationships with the assessor. They know how to talk the talk, and they feel confident in that room. And I want to supercharge them with technology, with all the evidence at their disposal, making sure that nothing slips through the cracks, and they are presenting the best possible evidence on behalf. The last thing that I'll say there too is, sometimes it's flat fee. Sometimes they'll charge a contingency. We're one of the lowest prices on the market. We charge 25% of the savings that we actually put in your pocket and nothing more. And I love that model because it motivates us and it motivates our team to be perfectly aligned with the customer or with the client, and that we're trying to achieve the best possible reduction because that's the best outcome for us as well.
So, okay. So what you're doing essentially then is you're actually, it's kind of a hybrid that you've created to some extent, which I think is brilliant. So you're taking the people, like you said, the boots on the ground, the folks that are there putting in the work every day that, we talk often, life isn't always about everything that A lot of times it's about who you know. Yep. And so if you have people that are working in those communities that have been to those offices, that know those folks down at the tax, the tax assessor's office and have relationships with them, it's helpful, right? It doesn't mean it's everything, but it's certainly helpful. So you're taking those guys and guys and gals, and then what you're doing is you're buoying them or backing them with technology tools that are helping make their case. So that way, instead of them just getting, X amount of dollars, they're able to get Y because you've now given them a few extra tools that can really dial in, to exactly how much they can save.
That's exactly right. And that's what we've been spending the last, 4.5 years continuing to refine is how do we make the best possible tooling that supports these individuals as they're going and advocating on behalf of our clients.
Now, do you guys, so you work with individual homeowners, you work with people with portfolios. Is it just a cost, like, is it a property by property situation? Are you even, do you have clients that you consult in things outside of just property tax savings? Like what other stuff do you guys do to help people save money?
Absolutely. Yeah. So we wanted to go deep on property taxes. We thought it was the best opportunity. You got to pay your tax bill every single year. There's always a chance and always an opportunity to protest and reduce that tax bill. And so we thought if we're going to start, that's the most logical place. Early on, when I was answering the phone for our customers, they'd call me and say, "You guys did a great job. What else can you offer for me?"
Yeah.
Kind of got my brain roll. Like, oh, what else can we offer for them? And so, we've been building out a lot of other tooling to try to help. So for example, we just rolled out a new insurance product where if you put in basic information about your insurance premium, your deductible, and so on, we'll constantly monitor in the background and we'll pull quotes without them getting your contact information. So you're not getting a bunch of spam calls and spam emails. We'll just pull in the background and make sure that if there's ever an opportunity to switch to a different provider and save some money, we'll just let you know, hey, this is an option. If you want to pursue it, go for it. If not, just some information to know.
Yeah. Well, I mean, like I said in the very beginning, with insurance costs being so incredibly high right now, It's a very difficult thing, especially if you don't. The hardest part about insurance, which I'm so glad that there is, a company out there that's trying to focus on this, is in running these quotes like this, because I deal with this every day whenever I talk to folks about buying, refinancing homes, and I used to not have to talk that much about insurance. I would say, hey, look, on average, if you're buying a home in Texas and you're going to spend, $200,000 to, let's say, $400,000 to $500,000, your insurance premium is going to be around $200 a month. And that's just what it was for a very long time. I've been doing it for 15 years. That's about what it was. Just within the last 2 or 3 years, though, I've had to change completely how I approach that conversation, because now we're in a place where not only can some people not get insurance at all, which is insane. There are actually companies out there right now that will deny insurance on a house or raise your premium on a house that had claims on it that you didn't own. Yep. That it wasn't your claim. It was just a property that had previous claims, and therefore they've elected to charge you more for that. And then the other thing that's occurring, which I'm sure you guys are seeing, is the deductible piece, right? Used to, in the state of Texas, standard deductible was 1%. So if you're buying a $350,000 home and you get a roof claim, you're coming out of pocket $3,500, about, give or take, right? So and then the insurance would cover the rest of it. Well, now, because consumers are so price sensitive these days and don't look deeply into what they're actually having covered, now these insurance companies have gone to these a la carte methods and started raising deductibles as a normal method of quoting. So now the standard quote is at least a 2% deductible. So your insurance premiums are up and your out-of-pocket expense is up, because when you do have that claim, which you will if you own your home long enough in Texas, now all of a sudden you're out of pocket even more. So what types of tools are you guys using to kind of help with that piece, and where do you see that piece being, playing a role in your company going forward?
Absolutely. Yeah. I mean, if we think about it, it's really the perfect storm of events, right? Over the last 5 years, the value of real estate in Texas is absolutely ripped, right? Yep. On top of that, now we're seeing that due to kind of the inflationary period, we see interest rates were pushed up. So those two combination of factors are going to obviously increase insurance premiums. And then on top of all that, we're seeing more and more natural disasters that are coming through, like this hurricane season is
supposed to be gnarly,
yes. and that's also, just going to cause, right, if they have to underwrite and they're trying to underwrite for climate change or whatever is causing this to happen.
Inflation has caused the cost to repair things to go way up. So,
exactly.
$1 billion event used to be a random thing. I don't know. I'm sure you've seen the stats where they were like, $1 billion weather event, say prior to 2015, you might've had 10 or 12 a year, or maybe even less, 7 a year. And now we're having like 20 to $30 billion weather events as it pertains to repairs.
It really is the perfect storm for what's happening now. And that's part of the reason why we wanted to build this, is that, that we can't offer insurance ourselves, right? We're not licensed to do so, and nor do we have necessarily the funds to kind of build that portfolio. There's really only a few providers in the US that can and will do it at large scale. And our thought process, at the very least, what we can do is make sure that you're getting the best possible deal out of the providers that are available to you, that will insure you.
So I'm curious, when you guys were coming up with this concept and thinking about doing it, because again, like, you're not reinventing the wheel here. You're just making it, I think you're streamlining it and making it much more simple and putting other pieces into what you're doing here. But as we talked about a little bit before we came on, when it comes to taxes and insurance and, utility, like, these are boring things that people don't really want to pay attention to every day. It's just, my internet provider is on auto draft. It comes out of my bank account every month and I never look at it. My car insurance, same thing. Now it's these days I look at it a little more because it's a little more shocking. And I have a 16-year-old. Just wait for that, by the way. Just wait for your insurance premiums on that one. Kids are beautiful until they have to get car insurance. But that's gone up dramatically. But again, these are things that, I know I do this for a living, and I do not want to spend 3 seconds looking at an insurance policy or checking out a premium and shopping. It is literally the last thing I want to do. And I think a lot of people listening to this might say, well, yeah, of course, we know you can argue taxes. We know you can shop for your insurance and all those things. But how many people actually do it? And how many people actually spend the time? And what you guys are doing is taking that stress off the consumer to say, hey, look, sign up with us and we will do all of these things for you. You're out there shopping for them on a regular basis. That's pretty great tool.
I mean, what you're saying is totally right. Like our time is the most valuable thing that we have. And,
Yes.
we're focused on so many things every single day. We have more important things to do with our life than always be shopping for a new insurance provider. And so the way that I thought about it is, even myself, knowing this problem, I didn't want to have to go through the process of putting my info in a bunch of different platforms, getting calls from a bunch of different, and just having to deal with that process. It's just, I don't need that in my life. I want some solution that will I can put it on autopilot. And that's what we're here to build, right? We want to make sure that all of the expenses that are associated with owning your home, that we are optimizing that you can rest assured and rest with confidence that we are taking care of it, and that we're going to be monitoring it in the background. And whenever we see an opportunity to save, or whenever we recommend you take action, that's still your decision. It's your prerogative.
Right. So you guys are doing this. This isn't like a subscription thing or anything like that. It is, hey, I want to sign up. I want to see if you can get my taxes taken care of, or, lowered this year. You go through the process of doing that. And then do you automatically, you have this client in your database. So when the next year rolls around, are you kind of already doing that in the background? And you're like, hey, here it is. Here's what we can do for you. Or do they have to reach back out to you to do it again?
So the way that we think about it is, essentially, it was very important to me that I don't want anybody paying for anything unless I'm actually providing you direct value. If I'm not doing something directly for you, I don't want a dollar coming out of your pocket. Right. It was extremely important that our model was pure contingency for the property tax protest. And so that's the 25%. When you sign up with us, it essentially puts it on autopilot, and every single year we will file a protest for you. Texas has a really nice law that says that your assessment cannot go up through a protest. It can only go down. And so there's no downside to doing it. So we essentially do it for you automatically every single year, unless you tell us not to. If you say, hey, don't worry about it this year, we won't do it. I'd probably ask you why, because there's really no downside, but we'll do it anyway. Or we'll only do it if that's what you want. And so, we file the protest every single year. We open up that conversation with the assessor. We go to the hearing, prepare the evidence, present the evidence, get the reduction for you. And essentially, you sign up, never worry about it again, and just rest assured that we're doing everything we can to minimize your tax burden.
Wow. I learned something every day. I did not know that through the protest process, they cannot raise your taxes. They can only lower them.
That's right.
Interesting. All right. Okay. So a little bit more on the insurance piece then. So what is I know this is kind of a new part for you guys that y'all are kind of working through, and there's always going to be kinks and bugs that you work out, but what's the general plan? Like, how are you? I mean, it seems like a lot of man hours, or maybe you've got, like I said, you've got the robots in the back working on you for you here, but how are you going to these different insurance providers and presenting information so you can see what kind of quotes you're getting?
Yeah. So there's some underlying APIs that I can just tap into that will let me just pull basic information, and then I just black out all personal information because I do not want them reaching out to me or any customer. And then we basically just ping all those different APIs and pull information. There's also a few aggregators that we've also tapped into. Our thought process is we want to expand the number of providers that we can reach out to as much as possible. And so we essentially reach out to all of them. We have a couple partners that we work with as well under the hood to do so. And we're constantly pulling quotes. And so every 2 weeks, we're essentially saying, is now a good time? And usually the answer is no, nothing's changing in a 2 week period. But especially now, given they're signaling that interest rates might start dropping, I expect insurance providers might start thinking about dropping premiums. And so, we're constantly behind this. We'll see. Yeah.
Insurance companies dropping premiums. That'll be the day. I can't wait till that happens. Yeah. Yeah. Okay. Well, that's again, fantastic. So you guys are checking every 2 weeks to see if there's a better premium out there. Now, I'm sure, are you reaching out to, is there a threshold? Because sometimes it's like, hey, your premium you can save $30 a year. And it's like, exactly. I think I'm fine. I'm good where I'm at. Is there a threshold where you kind of reach out to somebody and let them know?
Yeah. So the way we think about it is we want to present the information to you no matter what. So if you, sign into your account, pull up your property, sure, you'll be able to see all the different options available to you. We're not going to actually notify you unless it's a meaningful savings. And so, our RPMs are basically figuring out what that appropriate threshold is, that it's not annoying, but it's actually valuable to be notified. And we're constantly talking to people, especially the ones who we actually see savings opportunities for, being like, was this enough that it actually mattered to you? So should we dial it up? Should we dial it back?
Have y'all brought in any insurance folks to kind of help identify, because insurance is kind of a shell game a little bit, where you're moving coverages to save money? Because here's the thing, I don't know if a lot of people understand this when it comes to insurance agents. So, and also, Allstate, Farmers, Liberty Mutual, these companies that are agent-based models, they can't, their company tells them how much they have to charge, right? There is no like, well, because this guy, you can get it. They all offer the same thing. I mean, not every company offers the same thing, but if you work with an agent, an Allstate agent here, an Allstate agent there, they're giving you essentially the same portfolio of products. But it is how they cover it, what they do, and how they explain, and the especially when it comes to picking insurance companies, how easy are they to connect with and help file claims and that kind of thing. But are y'all bringing insurance folks in to kind of help identify like what coverages are necessary, what aren't necessary in order to kind of find that sweet spot?
Yeah, totally. It's I was surprised by how highly regulated this industry was. I knew there was some regulation, but I didn't realize just how deep it went until we started kind of getting involved in the space. And so we had to spin up a whole separate kind of sub entity that is actually a broker that's able to do all the things that we have to do to make sure that we're not violating any law, whether it's state or federal. And yeah, we had to bring in quite a few experts and advisors and so on to tell us exactly how we should be structuring this and when we can recommend things and what that should look like.
Now, I noticed, going through y'all's website and stuff, you mentioned something about some utility stuff. So what are you guys looking at doing there? Is there another piece of it with that as well?
Yeah, definitely. We're looking at, if you kind of think about like at a very high level, our vision is essentially, I want to look at your P&L, right, on your property, and I want to optimize every single line item on your P&L. So starting with the biggest, which is your mortgage, and working its way down, we basically want to look at every single one and say, is this as optimal as it can be? And so, obviously now's not the right time to refi. It might be soon, but that's something that we're just monitoring. We're just monitoring the mortgage market. We go to the next one, and that's your taxes. Then it's your insurance, and then it's essentially utilities, maintenance, so on and so forth. And so one of the things that we're looking into now is, can we help you reduce just your standard bills? You mentioned your internet bill is just on autopilot, right? It just deducts every single month. We've actually had great success lowering the Spectrum internet bill. And so it's one of the services that we offer is that you can essentially just upload your bill, and we have a team of people that will just go out and try to negotiate that bill the same way that we do with your property taxes and everything else. There's some caveats with utilities, with certain utilities, and that if there's only one provider, they kind of know that, and so they won't really offer any discounts.
Yeah, that's kind of our situation with Spectrum to some extent. There's not a bunch of choices out there, so
there isn't. But we've had great success with Spectrum. Funny enough.
I'm diving into Starlink. I've been looking at Starlink. I'm like, hey, Elon, can you save me a little bit of money or at least better service?
It's good. It works well. Like I was surprised by how well Starlink works.
Really?
Yeah.
You're not just telling me here. I'm talking to the tech guy telling me how good Starlink is. I'm gonna have to get it because I run into issues all the time with the internet, especially I have a house with a metal roof on it. So the Wi-Fi signal, gets kind of messed up when it moves around a different. So you walk into a certain part of the house and the whole thing just drops, and it's like a whole problem. Well, that's great. I mean, okay, let me ask you this. You said something about mortgages. So are you, I'm a mortgage guy, do refinances. Are you looking at adding another layer to that to start doing your own like lending tree version where you're searching for rates and products and stuff for people as well?
Yeah, that's exactly right. Right now, my objective is just to provide visibility and information, right? I figure at the end of the day, that is the single most valuable thing we can do is just give you the information that you need to make a decision. And so right now we're essentially just trying to monitor the market and provide you information and updates about changes in interest rates and in the mortgage market. As time goes on and we see that some of our customers might be due for a refi or that we had at the very least recommend it because you can save quite a bit. That's kind of when we'll start asking ourselves, okay, we're not going to be offering refis and we're not a mortgage broker. So, what's the right way that we can recommend a refi to our customers? And that's something that we're still exploring. Yeah.
Well, for anybody listening to that, something I talked about on my market update this past week and we'll be doing much more on it is we're in a weird, unique place. And this might be helpful for you guys as well in the market to where for a long period of time with treasury yields, with the Fed funds rate being held at a higher level, your short-term money was more expensive than your long-term money in many cases, which is why we've had this inverted yield curve. And so now that it's starting to kind of reset a little bit because as the Fed is deciding they're going to lower rates, now these yields are starting to come down. And so in the normal sense of things, when you borrow money for a longer period of time, you're usually going to pay more interest because of the risk involved in holding that money for a longer period of time than you would for shorter. But in these weird times we've had the last couple of years, it hasn't been the case. So, but when that happens, when it does start to reset itself, the adjustable rate mortgages actually start to become very attractive in a market like this. Now, they had a really, really bad name because of what happened in 2008. But I would caution people to understand that the bigger problem in 2008 wasn't adjustable rate mortgages. It was the education behind what they are and what they do. And it was behind qualifying people that didn't have income to qualify for with anyway. Like that was really the crux of the problems that were occurring. And then the incentives that were involved in the industry itself by, allowing people to do these types of mortgages. But going into this new environment that we're in where the rates are going to expected to start coming down, when you have an adjustable rate mortgage, they're fixed for a period of time, 3, 5, 7 years, 10 years in some cases. And usually when you're not, in this environment we've been in, then you're going to get an initial lower rate on the adjustable rate than you would on a fixed rate. And then after that 3-year, 5-year, 7-year period of fixed ends, then your mortgage will adjust down if the rates have been coming down. And where the benefit of that is that right now, if you have a 7.5% mortgage, well, today it could make sense for you to refinance to 6.5 because that's almost where we're at, right? That can make sense depending on the size of your loan. But if you get to what happens in 12 months when we get to 5.5, and then what happens in 12 more months when we get to 4.5? Well, each time you're going to be refinancing along the way, and that costs money and adds to your loan and all that kind of stuff. So there are some things that people haven't considered for a long time that may become very beneficial if they understand how it works. And, having somebody on your side looking and trying to figure out what the best terms for you are going to be and where it might fit with your current mortgage situation. So you don't have to every day. And you can offer that all into one spot is fantastic. Do you guys have much interaction with, like realtors or, providers that would recommend your service to their, customers? Like how do y'all interact with that?
Yeah, we it's this thing where like every real estate agent knows that when you have a buyer and the buyer closes on a home, you let them know, hey, make sure you protest your property taxes, make sure you file your homestead exemption, right? It's kind of these like de facto things that you have to do. And every agent knows to recommend it. And I think historically it was like, you go to the county website, you get the form, fill out the form, you got to file the form with the right, you got to mail it, or you got to send to the right email inbox and so on and so forth. And we noticed that, this was such a common recommendation, and agents were coming to us saying, hey, we noticed that you file homestead exemption for free. Hey, we noticed that, you guys are the ones that are a kind of easy recommendation when it comes to protesting. And so we actually launched like an internal partner program where real estate agents can partner with us. We give them like a special link, and it offers their clients a discount when they sign up for Ownwell. And so that's something that we actually just rolled it out this year, and it's been a great success.
Oh yeah, that's awesome. I mean, that's how you get to the consumers generally, because whether they're buying or refinancing at a time, they're thinking about those things right then, and that's when you can catch them, because otherwise, they're too busy trying to stay awake after their infant was up all night long. So you got to get them when you can. Yep. Okay, so you're obviously you're not you're quickly becoming one, but you're not a real estate guy, right? You didn't sell real estate forever and go to real estate school and own 50 properties or whatever. So how do you go from being a tech guy into this real estate world? And I want to know a little bit about you guys. You're not creating Skynet over there, but I'm sure you're using some AI to kind of help facilitate a lot of this. So what does that all look like for y'all on a tech side?
Absolutely. So my background, I was just blown away when the iPhone came out, and I was like, I want to learn how to use this thing. I think that there's so many cool things that we can build now that this is like this accessible internet platform. And so I started very young, just kind of tinkering with phones, trying to build my own apps and so on and so forth. And, when I had to go pursue a career, it seemed natural that I would pursue computer science. And so that was the direction that I went in. And, it's interesting. My father's a real estate investor. He owns quite a bit. He's also a commercial real estate investor and does syndication. You
grew up in the world, at least. You've been around it.
I did. My grandfather, so my family comes from Lebanon. I'm the son of immigrants. I feel truly an American, but my family is all immigrants. And they came from Lebanon. So my father came from Lebanon, and my grandfather back in Lebanon was a developer. So he actually built a lot of the high-rise buildings in downtown Beirut. And my great-grandfather was actually a property tax collector in Lebanon.
Oh, really?
I don't know if you
Well, the
remember.
universe has irony, doesn't it?
That's the thing, right?
Yeah.
I remember when I met my co-founder, and he presented this idea because of his experience as an asset manager, and he was talking about the inequity in the way that assessments are levied, right? That the assessor uses these basic models to basically, because they have to assess the entire county every single year. It's a small team. They don't have the resources to actually get really fine grain in their analysis. And so they use these simplistic models to do so. And that, we could use technology and software to try to basically build a counter argument to the assessor model and kind of get more fine grain and do a better job. And I remember sitting there listening to him talk about merging technology and computational systems with real estate, and especially in property taxes. And it was just like this beautiful moment. It's just, I felt so lucky to be in that room. And I like beeline to him, and I'm like, I love this idea. I think I can help build it. I want to be involved in real estate. It was funny that it almost like pursuing, technology almost felt like I was abandoning, like my familial heritage, that I was supposed to be in real estate, but I had somehow, cast it aside. And so like this opportunity just felt so natural. And so I don't even know what the word is. Just like it felt like it was meant to be, that I was supposed to do this.
The kismet. Is that what
yeah, exactly. Like something. Yeah, I just. So yeah, I went to Colton, and that's kind of what we started doing. And essentially, what I started doing is all this information is public record data, right? I mean, Freedom of Information Act, but even otherwise, it's all public information that you can just go on. Pick your county website. You can just go on and download all the data.
Do it every day. Look them up all the time.
That's right. And so I basically just downloaded bulk data, and I started writing algorithms over it, trying to identify where these gaps were. Like, are people actually overassessed? If so, how, why, and so on. And we figured out that the models that the assessors use, because property taxes are levied at the county level, right? And there's 3,000 counties in the U.S., and some of them are small shops, right? Like one assessor, right? One secretary answering the
Norma
phone.
Jean down there, and she likes her kitty cat, and don't come in at 2:00 because that's when she watches her stories. Yeah,
they're absolute sweethearts, but they're understaffed, and so they have to use software that we have these enterprise softwares that were created 20 years ago using these fairly outdated models for assessing real estate. And you can imagine. Like take any feature, like the size of the home and the value of the home. You imagine like you plot it in a little graph. It'll be like a scatter plot, right? Where as you get bigger in the size of the home, the value tends to go up, but it's not like a perfect straight line.
Right.
And the problem is that these models will try to find like a best fit line onto that. And so if you have like a scatter plot and you put a best fit line on it, some of it's going to be off, some of it's going to be dropped down to that line, some of it's going to be brought up. And these are people that are going to be underassessed and overassessed. And that's just the nature of it, because they have to assess tens of thousands, hundreds of thousands of properties every single year.
Yeah.
And so what we do is we built algorithms that were just taking a slightly more fine-grained approach, looking at a particular property, a particular neighborhood, looking at the characteristics of that neighborhood, and trying to identify what a more accurate valuation might be for that property. And we figured out that there were gaps in the way that assessors were valuing real estate, and that we could potentially contest them with the appeal. So that's kind of how we got started, and it worked. We were able to kind of create more compelling evidence that we would be able to present in a hearing and attain a reduction for our clients. That has been the spirit with which we started. And, ever since then, my thought process is essentially, can I build the most compelling evidence, right? Like, can I supercharge our people who are building those relationships, and they know how to talk the talk. They know exactly how to counter the assessor's points that the assessor loves to bring up about, the change in value over this year, or, the market peaked in November and it's coming down. And okay, we know how to talk against those like classic talking points, because we hear them all day, every day, and we're not going to get stumped by them. And so then on my end, it's, what can I build that will essentially give our people the most ammunition they can to walk in there and present the best case possible. And it's always nice when, we have some clients who they have like some foundation issues. Not that it's nice that you have foundation issues, but it certainly makes it a very easy job for me to argue that their basic model that's doing a best fit line is not taking into account the fact that there's a giant crack in that foundation, right? And that's an expensive fix. And so things like that, you have a damaged roof, so on and so forth, especially if you have like quotes or something like that. I mean, it's like a slam dunk.
Yes.
Yeah.
And have the exemption piece is also a big part that, again, most people in our world that do real estate, we know about exemptions. We know about over 65. We know about the homestead. We know about disabled, all these things. But I still am shocked on a regular basis about how many homeowners have no idea, A, that they exist, and B, especially now, because used to the homestead exemption, it would save you, I don't know, 30 grand on your value, $35,000 on your value, your taxable value that they would charge you on, which, every little bit helps, but it wasn't going to move mountains. You know what I mean? But now we're talking about $100,000 that it can save you in multiple jurisdictions on your tax bill. And if you don't know about that, and then when I talk to somebody, I'm like, hey, I looked up your taxes and you've been there for 5 years. You guys don't have your homestead filed. They're like, oh, we never got around to that. I'm like,
oh my gosh,
you just lost like $5,000 over the last 2 years. Like you probably look at that. Yeah.
It's even worse than that, because one of the key benefits of that homestead is that it locks in your assessment to no more than a 10% increase per year. Right?
Yes.
It essentially applies a cap. And if you look at the real estate market in Texas over the last 5, 6, 7 years, I mean, it went up way more than an average of 10% per year. And so we're seeing that we have some clients that sign up with us. They don't realize that they didn't qualify, that they qualified for that homestead. And as part of our onboarding, we ask you really simple questions like, do you live in this home? When did you move in? And if we see that you moved in and you qualify for that homestead, we can actually go back and we can actually get a refund check from the county for you. So we've had some monstrous refund checks come through the mail for our clients, and they're getting this.
Oh, you get them refunds too.
You can get refunds. You can go back 3 years and get a refund check. And so we've gone back and gotten, I think there was one check that was $42,000 that this client got back because they had their homestead and they did not apply for it. And we went back and got those last 3 years. I mean, it definitely follow your homestead. We'll do it for free. So highly recommend.
I did not know that you could actually get refunds on that. That's amazing that you could go back that far. It's crazy because for a long time, and this is something, again, we deal with in the mortgage industry a lot, is we have homeowners that will refinance or buy their house, and then they start getting all the junk mail, and the biggest one that we would all, the realtors and myself, when we're sitting at the closing table with the buyer, helping them sign their documentation, we say, look, you're going to get something in the mail from a company that's saying that they will pay them $100 or whatever it is, and they will file your homestead, and they will file this, and they will file this exemption. And, all things that you could do for absolutely free online. It doesn't cost you a nickel. So the idea that a company is finally figuring that out to say, hey, look, like you said before, if I can't give you something of value, then I'm not going to charge you anything to do that. That's right. And having the integrity to say, hey, look, this is a service that doesn't cost you any money. We're already doing something for you, that this is just another piece of something that we can add to it that isn't that much. As far as like time is concerned, because it doesn't cost any money, to have that part of it too, and then have the ability to then go back and if you did make that mistake, or you failed to file your homestead when you should have, and you've owned that home, to get money in return. I mean, that's massive. I mean, it just comes from a place of trying it really and truly. Companies say all the time, we just want to help our customers, we just want to make it better for them, blah blah blah. But it certainly seems like the way that you guys have positioned yourself, that really is a true core value of what y'all are trying to accomplish.
We try. And every single day we say the same thing internally. We always talk the same way about that is the most important thing. And like you said before, this is a boring subject that nobody really wants to think about. And so if we can create a tool that just puts things on autopilot and make sure that you're taking advantage of everything for the best possible outcome, and we structure the business model in a way where we're aligned with our clients, that's just a win-win.
All right. I feel like we did a pretty good job on taxes and what you guys are doing here, and insurance and covering all this. So now I want to nerd out a little bit because I've got a smart tech guy here, and I want to get your thoughts on some stuff. So I want to know, and we talked about this a little bit going into it. So AI is the hot subject. The top of these things, okay? It is the number one thing that most people are talking about. It is a concern for economic issues because of jobs. It is also a positive thing because of productivity that can then develop. There is the existential concern that folks have of the Skynet, AGI taking over and making us all extinct. There are some very smart people that have fears about that kind of thing, but the more I'm generally kind of I'm not a programmer, not a software developer. I don't know anything there is to know about code, but I'm very interested, and I use AI very regularly for my business. But what I've started to read and see, and I want to get your take on this, is this fear of the Terminator showing up and taking over the planet. I think is it's maybe not unfounded. Maybe 10 or 20 years from now we'll look back and laugh at this conversation, but AI is a tool in any business these days, especially in different real estate applications. I see it headed in a place where it gets very niche, right? There isn't we have these large language models like ChatGPT and others that are great at web crawling and answering questions and getting information quickly and helping you come up with ideas and brainstorming and all that kind of stuff. But where I think we'll actually start to see AI impact at least our industry is on very specific, designed levels. Essentially, it's not just this general model that's going to do. It's going to have a very specific programmed, path that it's going to follow. So you obviously live in this world. You're writing code and working on algorithms and doing these programming. So I would assume you have some thoughts on this. So I'm curious, where do you see, AI technology really impacting specifically the real estate industry and over the next 5 to 10 years?
Yeah, absolutely. So I think the first thing that I'll say is I think when every single new innovative technology comes out, people are panicking. It's essentially every single time. I mean, I remember reading about how when electricity was first invented, there was a city in kind of the East Coast that had essentially, they were candle factories. That was their core business. Yeah. And they actually legalized the use of electricity within city limits because they wanted to protect their business, right? Yes. And so, every single time we're like, oh, there's going to be no more jobs. We're going to lose all of our jobs. Every single time that we see kind of a new breakthrough in technology.
Yeah, when the printing press came out, everybody was freaking out that everybody was going to spend all their time reading books and not do any work. It's like, you guys spend too much time reading. What the hell's wrong with you?
Exactly. And okay, maybe that's true, right? And maybe AI will displace a lot of jobs. So let's look back through history. All these times that innovation have happened, we must be at a massive unemployment rate today, but we're not, right? And I think what ends up happening is that the realm of human productivity just expands. We just do so much more, and we're able to focus on things that we weren't able to focus on before, and push new boundaries. And so I think of it very similar today. I don't see any fundamental reason why the advent of, or the innovation that we're seeing in AI would alter the world in a way that violates the course of human history up until this point.
Sure.
I'm a big believer in it. I'm a big believer in adopting it. I recommend all my engineers, every single AI tool that comes out, let's try it. Let's see it. Let's see, does it make us better? As long as it's not stealing our data, which I am very, very, very careful about. I read the terms and conditions very carefully, make sure I get on the phone, make sure that
so you're the one guy that actually reads those? Okay.
Reads it and doesn't just click I accept. Yeah, that's me. I'm that weirdo.
Good.
I'm very
you're
careful.
The smart one. You're not the weird one. I wish I could, not fall asleep reading terms and conditions, but then half the time you'd never sign up for anything because it's like, well, I don't want to agree to that. Well, you can't use it.
I remember my closing docs when I bought my home. I read every single word, right? Yes. I'm that guy. Yes. But yeah, so I'm a big believer in adopting new technology. And I think ultimately what we're going to see is, the same way that the iPhone was introduced and has completely changed the way we communicate, completely changed the way we do business. It's changed the world. Some may argue it's not for the better, but it's at the very least more efficient, more productive.
Well, I mean, it's like anything. It has its positive qualities and its negative qualities. Exactly. It is a tool, right? Exactly. A hammer is a tool. You can use a hammer to build a house, or you can use it to bash someone's head in. But no matter what, it's just a tool, and it's only a tool used it's evil or good is just purely defined by the user.
That's right. And so my opinion, my strong opinion is that there's going to be this gap of the people who learn how to adopt the new technology and become greater and become more productive and become almost like a superhuman with it. And there's going to be the people who reject it, who are scared of it. I don't want an iPhone. I don't want an email. I don't want to use the internet. I'm good. Right. And look, I appreciate, I respect that. And there's plenty of successful people that are like that. I just think there's so much more we can do if we just embrace technology and try to push the boundaries of what we can achieve. And so I believe that the world will be different in 10 years because of AI. I think the markets may be overreacting in the short term, that they think it's all going to happen in the next 6 months. It's not.
We'll get into your experience with NVIDIA in a second.
Yeah, sure. It takes time, right? Especially for the whole world to adopt it. And real estate, for example, is one example of an industry that's been pretty slow to adopt new technology, right? It had its way of doing things, and it's stuck in its ways, and it's got its system, and that did work, right, for a very long time. But now, in the age of information and technology, it makes sense for us to consider that there's a new and potentially better way of doing things. And I'm a big believer in that. I'm embracing it fully.
Yeah. Well, I mean, real estate in general is, I don't know the latest statistics on this, but the average real estate agent in the country is somewhere in their 50s, and the average loan officer in the country is somewhere like in their late 50s. Okay, so we've got a lot of olds running the thing, right? Including myself. I'm only 45, but I'm creeping there quick, and we are typically resistant to change, resistant to doing things in a new way, but also our industry is very, very highly regulated. As you can see it playing out right now in the media with the agent commissions and compensation that's going, and how all that is being handled. So, there's a lot of eyes, because again, real estate is by far one of the most lucrative industries to be involved with of anything in the country. I mean, I think it's something like 90% of the millionaires in the United States got there via something involving real estate. So when you have that much money concentrated in a particular industry, everybody's trying to get into it, and then you have to regulate it very well for that exact reason. So everything tends to move a lot slower, and you have governing bodies like HUD and Fannie and Freddie. Just something simple like this is crazy, but the technology has existed for decades to where I can sign a document via the internet, right? And it be a legal binding document in a million different ways, right? And you can verify IP addresses. You can have certain kind of, check-ins to make sure that you're a human. All these things can go into play. You can take a picture of yourself with your driver's license. There's a million things you can do, right?
Yep.
But yet the vast majority of our industry still requires, at least not everything now, but a few documents to be signed physically in front of a person that's going to write in a book that you are who you say you are, right? Yeah. And then they get bent out of shape because you're using the wrong color pen. So this is the kind of thing that we're still today in 2024 still dealing with. So the idea that we're going to allow, that our industry is just going to all of a sudden adopt all these AI tools that could definitely make it cheaper, more efficient, and everything to do our jobs is a little bit far-fetched. They're not going to do it right away. But do you see anything, or are you guys looking at anything right now, kind of to the side? And maybe you don't want to tell me because you don't want to be first to market, but of innovations using this tool that you think could really impact the real estate industry the quickest?
So what I'll say to that is like, my co-founder and I are brainstorming every single night. And we're going to do tonight, right? We're going to go grab dinner, and we're just going to chat about how we can make the world better, right? And what can we bring to the market that's going to help people, that's going to improve efficiency, improve productivity, minimize costs, whatever we can do. Sure. And we've got a very long list of ideas. And really, at the end of the day, it's, what makes the most sense for us, what makes the most sense for the business. We can't just do something completely radical and new that makes no sense in the context of Ownwell as it is today. But
you got to stay within your boundaries.
Like insurance, that makes sense. You do property taxes, you do insurance, that makes sense. Maybe you want to help out with my refi too. Okay, maybe that makes sense. And saying okay, we're going to build a whole new brokerage that's going to change the way that we buy and sell real estate. That's a little far-fetched, right? Yeah. And there's a lot of players in the space that own the space. And the last thing that I want to do is try to bully my way into a market that doesn't need to be innovated into yet. At the same time, technology is coming. I see that it's being adopted. I like that. I'm excited for it. I plan to be essentially involved in this space for the rest of my life and doing everything I can to make it better. And, I look forward to the future, and I look forward to, and don't sell yourself short. I'm sure that you're adopting new technology. We're on a podcast right now. You are yourself adopting the tooling that is going to advance us into the next age. And, even if, AGI came tomorrow and was going to completely change the way we do things, like you said, there's plenty of rules and regulations about the way that things work, and it's not going to just throw all that out the window. We have to play within the bounds of the system that we've created. Yeah.
I am curious. So I saw that you worked for NVIDIA for just a short amount of time. And in the AI conversation, the fact that particular company is, basically held up the entire stock market for the last 18 months. I'm curious, when you were there, did you have options?
Oh yeah. And even afterwards, I told my dad, this is a good company. Buy some of this stock.
But you kept them even when you left?
Of course. I'm a long-term believer. I should have bought more. Looking back.
No doubt. Yes. Yeah. Did you leave to go start your own thing, or was it like, what was the environment like there? How'd you enjoy that?
So first of all, I absolutely loved my time there. I knew that was my background. I loved computer hardware. I loved kind of building chips and the design of chips. I still think it's one of the most interesting, just fascinating things. One of the things that I love about it so much is that it's ones and zeros. So it's either true or not true. It works or it doesn't work. It's very precise and very fundamental in that way. And so it just like naturally meshes with the way that I think. So I loved hardware. I love chips. And so NVIDIA was like, they were doing the coolest stuff in the hardware space back then. Right. And this was back in like 2014 or so.
Yeah.
And so I knew that I didn't even consider applying anywhere else. It was like, I only want to work for NVIDIA. What they're doing is the coolest. Nowadays, I got to give credit to Apple too. Building their own silicon is like, I love what they're doing with the M series chips. But back at the time, back in the day, it was NVIDIA and only NVIDIA that was doing these kind of domain specific computing. And so I wanted to work there, and I wanted to work on their GPU itself. And so, I applied, got in, spent some time there, had a really great time. It was a big company. Even back then, it was a very big company, lots of people, but the people that I worked with were so smart, so capable. It makes total sense why they are at the forefront today that they were in. And I at the end of the day, I decided that I wanted to pursue academia a little bit, and I wanted to go into my PhD. And I wanted to kind of do my own research as opposed to being a part of the NVIDIA research system.
Yep.
And that was, my decision. And you could argue that maybe it would have been more lucrative for me if I stayed.
Hey, everything is all based on judgments of time, right? So, 2 years after, or 5 years after, maybe 10 years after, maybe 30 years after, when, Ownwell's rocking and rolling, and, you're living your best life, making millions of dollars, helping people, and, feeling good about being able to wake up with a smile on your face every day because you're doing the right stuff. That's a whole other, that's a whole other story. So, it's all, it's all about where you're at right now, right? Keep your feet where you're at, focus on what you're doing. You did what you did, and we all have a past. We all did great things or bad things or good things or whatever, and we're all going to head in the other direction and do great things or good things or bad things. So it's just you can't look back and wonder what if, but you can always learn from every experience that you have, and being a part of a company like that, and then just seeing it explode as it has. Unfortunately, in the world of investments, what goes up tends to come down. And, if you are there on the ride up, I hope you get out on the ride down to some extent. I mean, we'll see. I mean, but a lot of people, what was it, Cisco Systems, that they kind of compare that to when it took off, back in the early 2000s. So, there's some comparables there, but either way, having that experience and being a part of an entity like that is, built on innovation and growth, I imagine you just took so many lessons from that to kind of help you develop your company and grow from there.
Yeah, absolutely. And just to be clear, I don't regret it. I feel like the impact that I get to have in people's lives today is so meaningful and so valuable. And to have such a direct impact in what we do is just such a satisfying thing, right? Like, I know I'm helping people. I know that my decisions are creating a better world for so many people that are, like you said, things are getting so expensive right now. And anything that we can do to make it better, I want to keep pushing forward.
Well, these days, like I said in the very beginning, housing affordability it's the worst that I think it's the worst it's ever been. And I think when you compare it to what people make as far as their income compared to what it costs to live, and rents are coming down, but it's only because they've overbuilt, and they have stopped building. And so you're going to see those start to come up, and there's more and more technology that's coming into the rental space where rents are being controlled and prices are being controlled and monopolized, not by individual companies, but by individual software that runs over the entire industry. So these are all threats that are coming into that. And home ownership has been the path to wealth for the vast majority of people in the United States since its foundation. And, the fear is that is starting to diminish because of the costs and people not being able to afford it. And so I love talking to people that are trying to find ways to make housing more affordable and help people get to that place, because if you can own a home and you can have something to call your own, it's better for our communities, it's better for our families, it's better for the country, it's better for the state, it's better for the county, it's better for everybody, right? Yep. And that's what we ultimately want. We want homeownership to continue to rise. We don't want to see continuing generations, Gen X, Gen Z, millennials not be able to own homes. Like we got to make sure that that's still the number one priority, because, they say that y'all's generation is that you want to be transient, you want to move, and you want to have different, you don't want to be tied down to a place. And I would say maybe up until the point to someone gets to a place where you are and you start having kids. And then once those kids come into play, then putting some roots down is generally, something that everybody likes to do. So I'm so glad that you guys are out there doing the good work, and helping folks out. Anything you want to say before we go? Let everybody know, obviously, where to find the company, any realtors out there, tell them about the referral program, all that kind of stuff before we wrap up.
Yeah, sure thing. Everything's on our website. So that's ownwell.com, OWNWELL.com. It's very fast to sign up. We try to make it as streamlined as possible and basically answer a few questions, authorize us to represent you as your tax agent, and we'll take it from there. That's it.
And then what about the realtor referral program? How do they get involved with that?
Oh yeah, if you go on our website, scroll to the bottom of the page, and there's a kind of a partner program. Just click on that and you can submit your information and we'll have somebody reach out to you.
Heck yeah. All right. Well, thank you for everybody that stuck around. I appreciate it. We will be back on Monday with another market update. Rates are coming down, and they may be coming down faster than we anticipated. So there's been some big moves today, and I expect when the jobs report comes out tomorrow and shows unemployment ticking up again, which is very likely, that we'll see another hit. So good news for rates, maybe not a great news for the economy, but we just keep on keeping on. So thank you, Joseph. Appreciate your time. Everybody have a great weekend, and we will see you back next time.